All right, everybody, welcome back. My name is Alex, and this is Alternative Finance, and we are back with our Investing 101 series, part two. So we're moving right along for our Investing 101 series. So if you are here for that, thank you for joining us, and feel free to give this video a like, subscribe to the channel so you can be in tune with the entire series that we are doing. And without further ado, we're going to jump into day two topic, which is how does FDIC insurance work? So I'm sure most of you have heard about FDIC insurance. Some of you might be vaguely familiar with it or very familiar with it, but we're going to talk about what that is. So if you're not, buckle up and here we go. So first things first, let's start with a definition. What is FDIC insurance? So I'm going to read this with you. The Federal Deposit Insurance Corporation, FDIC, protects your money in deposit accounts at FDIC-insured banks in the event of a bank failure. It ensures that depositors won't lose their insured funds even if the bank goes under. So what the heck does that mean? Well, in the simplest terms, it means that the United States federal government says, hey, we have got your back if anything goes wrong with the bank that you have your money at, assuming that they are FDIC insured and that you have the amount that you have there is within the FDIC insured limits. We will back that up. So if the bank goes under and they can't pay you back, the federal government is literally saying, we got you. So before we get into how it works and what the limitations are and all that good stuff, let's first talk about what products actually have FDIC insurance typically. So what is usually FDIC insured? We are looking at basically bank products. You can see that at the bottom. So what does that mean? Checking and savings accounts at your banks. Typically, money market funds are going to have FDIC insurance. CDs, certificate of deposits. So essentially, if it's at a bank and it's an FDIC insured bank, that's when we're really having the conversation about FDIC insured products. So what is usually not FDIC insured? So that's going to be your things like stocks and bonds, mutual funds, life insurance products, cryptocurrency, definitely not FDIC insured. Physical assets, so like gold, your house, things like that are not going to be covered under the FDIC insurance umbrella. Another simple way to think about it is that basically anything that is like investments, right? So CDs, bank products, money markets, those tend to fall more under the cash name, like they're cash investments, but they're cash investments. Anything that's not a cash investment usually is not going to have that FDIC insurance. There you go. So now the nitty gritty. How does the insurance actually work? So let's break it down and read through this real quick. If the bank you have your money at fails, you do not have to do anything. So the FDIC steps in immediately and takes care of everything for you. The FDIC insurance automatically covers up to $250,000 per depositor, per ownership category, at each FDIC insured bank. Now, whoa. Let's stop right there for 1 second because a lot of people do not know this. A lot of people know the $250,000 number, but not very many people are aware that that is actually per registration. So what the heck does that mean? Let's take a look at an example to answer that question. So if John and Jane Doe are customers at Mo Money, Mo Problems Bank, what is the maximum amount of cash they can keep there while maintaining their FDIC and coverage at 100%? Now, first of all, we got a little bit of a judgment on your bank choice, Mr. Mo Money, Mo Problems, but as long as they are FDIC insured, they meet our parameters for what we're talking about here today. So how can they maintain maximum coverage at this single bank? This is how it would break down. So let's walk through this one step at a time. First of all, we got John. John has an individual account. That's an account that's in his name. His wife is not tied to it. She is not on the account. It's only his account. Now, obviously, they're married, so there are things, but this account, for account purposes, is in his name only. $250,000 in that account is covered fully by FDIC insurance. Now, Jane, likewise, has her own account. She's got her account. Don't feel bad for Jane. She's got $250,000 in there as well, and that is also insured per depositor, per registration. Now, this is where people tend to not necessarily know that there's more than that potentially. So now let's move on down to John and Jane have a joint account. So this is an account that has both of their names. They are joint owners of this account. They can hold up to $250,000 each in that account, and it be 100% FDIC insured. This is totally separate from their individual accounts. Their individual accounts are registered to them. The joint account is registered to both of them. Those are different registrations, and even though they're the same person, they're registered different account type, $250 for each one of those. Now, there's actually even a step further, right? If they have IRAs at this bank, now some banks do offer IRA type of accounts, individual retirement type of accounts. We'll cover what those are later. But if they offer an IRA, that retirement type of account, that is a whole nother separate layer where you can get that $250,000 per person. So if you have a married couple at one single bank, they could very reasonably get $1.5 million in there and have all of it covered by the FDIC. Now, obviously, if they're going to pursue this, they want to make sure that they are registering their accounts properly. And furthermore, as those accounts begin to appreciate, they will start to step out of that FDIC coverage because now those individual accounts are all bushing above $250,000 per person. So they'll want to make some adjustments there and monitor that and make sure they're aware of those things. But you can get a lot of money covered under the FDIC at a single bank, and a lot of people are just not aware of that. So before we head out here today and wrap this up, I wanted to share one more thing with you all because I think this is very pertinent when it comes to FDIC insurance. Now, I have a lot of people who FDIC insurance is the end-all be-all for that level of security because absolutely it is one of the highest levels of safety and security that you can pursue in the investing world. But it is not the only ultimate secure investment, right? So I want to take a second to read this just so you all are aware. FDIC insurance is widely known as the safest course of investment. I personally would argue that treasury bonds are essentially FDIC insured. Now, whoa. What does that mean? Because they are not technically FDIC insured. So what am I talking about? What I mean by that, you guys, is that both FDIC insurance and treasury bonds are both direct obligations of the federal government. So if they can't pay back their bonds, right, if they basically are lending money out and they can't pay those bonds back, it stands to reason that in that type of world, the FDIC insurance would be in the same boat because both are the federal government saying, we guarantee we will pay you back. And if they can't do it in one circumstance, they likely can't do it in the other. So while treasury bonds are not FDIC insured, there is a layer of security within them because they are also direct obligations of the federal government. So I bring this to note because a lot of people, if it's not FDIC insured, they don't even want to consider it, right? And I would urge you to look beyond that and realize that there are other avenues that we can take to make sure we are investing responsibly and safely. Now, having said that, FDIC insurance is absolutely one of the safest courses of action you can take. So if that is your comfort level, absolutely do so. Just make sure you're operating within the parameters we've discussed today. So as always, please consult a financial professional if you are looking for personalized advice. If you like this content, please feel free to like the video and subscribe to the channel. We'll be doing a whole series here. We got a whole long way to go. So subscribe to the channel if you're interested in hearing more about that. And until next time, you guys, that's Finance AF.